This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's continue to watch over the gold market. As we have discussed previously many times, that market wasn't able to complete any of bullish setups that have been formed here previously, so market has failed to accomplish the bread and butter buy on the weekly time frame chart, since this reversal down was too early compared to the target of the bread and butter. Market wasn't able to start the double bottom pattern here, and this action is not really stands in a row with this possible double bottom. Market will not be able to form even the butterfly buy because these lows stands below this previous bottom. So here we couldn't get even the butterfly pattern. And in nearest term perspective, only one pattern that we could count on, if we could in general count on any bullish pattern at all here, is the possible butterfly here, a small butterfly. If even this butterfly will appear, it could not shift the sentiment totally, I mean long-term sentiment, but it could postpone probably the possible downward action with this A, B, C top, if market will form here some sort of the butterfly and will still show the retracement to the 1350 area to the downside. But currently, guys, to be honest, the hopes to see this possible bounce right to the 1350 area stands a bit blurred. And if you'll take a look at this action on the daily gold, you'll see that market is forming that really strongly reminds the bearish dynamic pressure, because you can see that trend has shifted bullish, but price action stands bearish, stands to the downside. Even this bullish stop grabber that has been formed yesterday doesn't give us any really significant confidence that market could turn to the upside. And by the way, guys, the kind of the stop grabbers that I do not like to rely on. I prefer to rely on the patterns that stands in the direction of the previous trend. So say we have the downward action, I prefer to get here the bearish grabber and to rely on it. That points on the continuation to the downside, but not on the bullish grabber that stands against the previous move down. So in general, these grabbers are weaker than those that stands in the confirmation and in a row with this previous trend. Anyway, as you can see, this action tells about the possible downward acceleration if it will continue, if market will confirm this bearish dynamic pressure. If this pressure will be formed, then it suggests taking out of these lows. But if these lows will be taken out, that, as was said yesterday, will open the road to the monthly bearish grabber that could lead market as far as to the 1170s lows that have been formed in the previous year. So that's really a responsible moment for the gold market. Meantime, on the lower time frame charts, as we said, there are still some chances exist on the possible appearing of some bounce or something of that sort. And in the short-term perspective, the situation looks very similar to the euro currency. So if you take a look at the forward time frame chart, as we mentioned yesterday, we could get here some goofy-looking, curious-looking, a bit skewed head and shoulders pattern. So that could be the left shoulder. The head stands at 1618 of the shoulder. That's normal ratio for the head and shoulders. That could be the right shoulder if market will hold above 1280 area. Okay, that's the 618 support of this move up. The second part of the head and shoulder could start to looking as the Gartley's triple to buy. That's very typical for the head and shoulders pattern, and could get us the greater A, B, C bottom, D pattern. In this case, the nearest target of this optimistic scenario, as I have marked it, will lead us to the 1350, 1370 area. The second stage, if market will really start to accelerate to the upside, the second stage of the optimistic scenario could lead to the appearing of the butterfly here. Okay, that we have discussed on the daily time frame chart. This butterfly, this could be the butterfly. That in turn could lead the market right to the 618 target, but probably we should be focused first at the 127. Okay. Right to the 1350. Okay, so that will be the second stage of the optimistic scenario. But as I said, right now I'm not sure that it will be really materialized, and from that standpoint our major focus in the nearest perspective, in the short-term perspective, is the 1280 area. If market will hold there and really will give us this pattern, then we could count on this possible bounce. But if market will fail and will move below the weekly pivot support one, here you could see this is our FIB support. That is also this is also the consolidation previous that also will give some support to this area. Also we have this ABCD down pattern that will create an agreement very similar to the hourly euro currency. If market will pass through the weekly pivot support one, that will be the great challenge on the failure of the market to form any bullish pattern in the short-term perspective. In this case, we probably should be ready for the taking out of these lows, and that will be really significant shift in the bearish sentiment on the market. That's why this area is very significant. Maybe the non-farm payrolls will shed some light on this situation, but that's the major pattern, that major level to watch for, because that is the clue for nearest perspective on the gold currency.